Good day, ladies and gentlemen, and welcome to the show on this Monday, the 3rd of August, 2020. I'm glad to have you guys here. Now, this weekend I was thinking about something. Sometimes things just come to you. You'll be going along, you'll be researching into something, and researching it. You can't see it. They have the saying, you can't see the forest for the trees. And, something came to me this weekend. It's like a light bulb went off. I was like, wow, that's it. It's like Laurel and Hardy. Do you ever watch the Laurel and Hardy films and stuff? Well, Laurel, he gets a big payday or whatever. Say they work together, and they get a big payday, and there's a big heap of $1 bills they just got paid. Back in those days, $1 is worth $1. So they're going to split it between them. So Laurel goes over to Hardy, and he says, "Okay, we got this big pile of money. You're going to split it. Fairsy squaresy between us, right? One for you, Laurel." He hands Laurel $1, and then he says, "One for me. Two for you," and he gives him one more dollar. And two for me, and he gives himself $2. Three for you, and he gives him Laurel $1, and then he gives himself 1, 2, 3 for me. Four for you, one for, and he gives him one more dollar, and he 1, 2, 3, 4 for me. This is what's going on. Wall Street, with this bailout money and everything, this is what they're doing. The exact same thing with the money. To Main Street. Us, the general people. They're giving us a little bit. But they're one for you. 1, 2, 3, 4 for me. It's that sort of thing, where they're getting the big bulk of the money of this. So what's happening is the Wall Street side of the fence, they're hyperinflating. They got money raining from heaven. Now, gold and silver are sold primarily, the trading and everything is on their side of the fence. The stock market's on their side of the fence. All of the things that are in the economy that we look at, all these indices and everything, the prices of everything, is all on their side of the fence. And their side of the fence is hyperinflating. Meanwhile, over here, where we live, well, they were giving us some, with the $600. We were getting some, not completely cut off. But our economy, because of this virus, our economy is shrinking so fast, we are in a deflation. Quite literally a deflation. The economy is deflating on our side of the fence. And it's deflating at such a rate and such a speed. See stores closing everywhere, and the stores that are open got no customers. How can they survive? I was watching a show on YouTube, and an old fellow went out for a pizza at Chuck E. Cheese. And this is just recently, And he said, I went in to get my pizza. And he said, "There's nobody in there." He said, "It's just me and buying the pizza." And he said that they had all kinds of stuffed toys for sale, all kinds of games you could play in there. And he said it was just basically, except for the people that worked there, it was basically empty. And I was the only guy that bought the pizza. That's what the whole economy's like now. There's no real bunch of customers. There might be a few places where people are actually going out, a few malls and stuff that are open where there are people buying things. There's a bit going on, but compared to what it should be, it's dying, and it's so expansive. It's all across America. You could get in your car right now. You could drive 1,000 miles away, and you'd find the same situation as in your town, where everything's basically being closed up, and there's no customers, and everybody's staying home, and on and on and on it goes. So our economy is just falling off cliff. And the amount of money that they've been pumping in has been kind of holding it back a little bit from falling off the cliff. But still, it's heading toward the cliff, falling off the cliff, and they can't keep up. It would require so much money that they're basically starting to stay, at a certain point sometimes when something seems impossible, they'll say, "Okay, well, let's just keep pumping up our side of the economy. Let them fall off the cliff." They'll say that until it starts to fall off the cliff. And then there'll be a mad panic to stop it from falling off the cliff. But here's the part that I got this weekend. I know you guys been waiting for it, but here's the part I got this weekend. that was kind of like a real revelation to me. I always thought for years when the hyperinflation would come, gold and silver would skyrocket to the moon, and I thought it would be the rally that you couldn't sell on for free. You wouldn't sell for fiat because in the middle of it, when gold and silver were like going to 5,000, gold's going to 5,000, 6,000, 7,000, 10,000, fiat would be going down so fast. This is the way I was thinking, that you wouldn't want to trade for fiat, because if you traded today, say you sold your ounce of gold for 10,000, tomorrow it might be 10,500. So people would hang on to it, and ultimately the fiat, this is the way I pictured it in my mind, the fiat would become totally worthless, and so your gold and silver would become the money, and you wouldn't need to trade into fiat. It seems like there's a new little angle, new little twist to this I can see. It's not like I was thinking it was going to go. That's how I was thinking it was going to go. There's a new little twist to this, guys. The fact is, the economy's split in half now. And we got the hyperinflation on Wall Street's side of the fence. The big shots, the bankers and the politicians and everything, and the money markets, the stocks, the bonds, everything is hyperinflating because they're getting all the money. Whereas our side of the economy is split. It's like a walnut. It's split in half, and our side is just shrinking and dying into a deflation. Well, you know what happens when the deflation hits like that? Nobody has any money to buy anything. And what does that mean? That means prices. If a person, like, say the guy went into Chuck E. Cheese to buy his pizza, you know? I'm talking about the old guy again. He went into Chuck E. Cheese, and there's nobody in there. A bunch of stuffed toys over there they're trying to sell. All of the prizes that they used to have, I guess they're trying to sell them, trying to liquidate them. And the pizzas are cheaper. They're not real expensive, but there's nobody in there to buy them. Maybe they got a whole big thing of dough that they need to sell or whatever because they bought it, and now it's going to spoil if they keep it too long or whatever. And so what happens is, because there's nobody there, they say, well, we'll reduce sale. Let's move all these stuffed plush toys out for half price. Let's put a half price sale on the pizzas and see if we can draw some customers in. We might as well do that as throw it all out in the dump. So prices drop. This is what happens in a deflation. Prices drop. And people don't have any money. Money starts to evaporate. Well, they just cut off the $600 stimulus that they were given for unemployment insurance. They just cut that off. That money's not going to be coming in. That was a lot of money. That was a big pool of money coming in. That's gone. And it's a big thing. It's a bit up in the air now about the new $1,200 stimulus checks. What if they don't come? What's going to happen? Everybody is going to start to get poorer and poorer, not have any money. So stores that are open, the few that are left open, are going to start to reduce prices to try to draw in customers. That's deflation. So we're deflating on our side. The dollar's not going to hyperinflate. It's becoming scarcer on our side of the economy. Now, take a look at the Wall Street, though. They're inflating. They're the ones that are buying gold and silver, because they know that there's too much money being created on that side of the fence. And so we see gold and silver prices escalating, going up. At the same time, money's disappearing on our side. So what we're seeing here is an unusual situation where gold and silver could continue to go higher and higher and higher. Meanwhile, nobody in the general economy's got any money. And money, the value of money is actually, prices on things might actually start, in some cases, in some areas, start to decline. In other words, you can buy things cheaper. While at the same time, gold and silver's going through the moon. And this effect that's happening could get worse and worse and worse, guys. And so whatever gold and silver you've put away, or cryptocurrencies, could go to take a moonshot, because they're being fed from the side of the economy that's got the money, and the other side of the economy that we live in over here, money's going to disappear faster than, and nobody will have any money. And so being rich is not always about how much money you got. Sometimes it's the fact that you have money at all. Nobody else does. You know? And that's the effect that's going on right here. This is weird. It's really weird, but this virus is really weird. And this is a whole weird situation that we're in right now. And so, I'm just trying to stay ahead of it, guys. Trying to figure out what angle it's going at. And so instead of the dollar hyperinflating while gold and silver goes up, which is what I expected, perhaps it won't happen that way. Perhaps the dollar will not go into some great hyperinflation, but gold and silver will still go up, will hyperinflate, because that side of the economy that's hyperinflating is driving the prices up. So, could be extremely good investment for the smart people who have bought into gold and silver and cryptocurrencies early on. It could prove out to be the smartest move you ever made in your life with this kind of action happening. Anyway, let's get into the markets. Let's open up the charts right here. Take a look at what's going on. We're going to take a look at the silver price first. 24.23. It's getting used to these new prices. I don't see it dropping really any. It's kind of going along sideways. Dropping a little bit. It's down 24 cents. But, it's kind of following in here around $24.50 or so, maybe $24, for silver, which is a new price that's established for itself. Just a few weeks ago, just a matter of weeks ago, it was down under 20. Take a look at gold. 1969, down $7. But, it's not really, I don't really consider it down that much, more or less. It's just fluctuating in its range, its new range itself, set for itself. Up around 1950 or higher, Okay, cryptocurrencies today. 346 billion. Bitcoin dominance is 60.6%. That's a low Bitcoin dominance. That's an indicator to me that we're in a bullish market right now. $11,392 for Bitcoin. Keep your eye on Litecoin. It's at $59.98 right now. I'm a huge fan of Litecoin. Litecoin and Bitcoin. Those are the two. Those are the two I like the best, There's a 4-to-1 ratio there between Litecoin and Bitcoin. There's 4 times as many Litecoins. Litecoin's faster, and they're both run on the Lightning Network. Let's take a look at the Dow Jones today. 242 points to the upside. See, it's being hyperinflated. Gosh knows what markets that the Fed's into right now and pumping money and liquidity into that we don't even know about to hyperinflate these markets. But they're not hyperinflating the general economy. That's the thing. It's deflating. So we've got a separation there between the two economies. Okay. Crude oil, 41.03 today. It's up 0.76, 1.89%. U.S. Treasuries today. We're looking at rising yields. And this is the first day I've seen significantly rising yields. 2.7 basis points in the U.S. 10-year. It's standing at 0.56, and the U.S. 30-year is at 1.24, and it's up 4.5 basis points. That's the first really good tick up I've seen in a while on these yields rising. Generally, you see them falling. Dollar index going along sideways today at 93.64. Thank you for listening to my show. Give me those thumbs up, guys. I hope I opened up a few little insights for you guys today into what's really happening in the economy out there right now. How it might prove to be the best investment you ever made to get out of the dollar, and it might mean that you have more dollars in your pocket, ultimately. Where other people might be. See, I'm going to tell you, you got to know what's good. Like sometimes a guy will come in and I used to play golf, and a guy would come in off the course and he'd say, I shot an 89 today. And everybody would think that's wonderful because of the day. It may be a hurricane going through and the wind's blowing and the course is all wet and everything else, and it might be like the score of a lifetime. Some other guy might come in on a sunny, beautiful day on the same course and say, I shot a 69, And it might not be as good a score because it might have been a beautiful day in perfect conditions. Okay, it's the same way with money and being rich. Sometimes you can be rich and not have as much money as like Warren Buffett or anything like that. But it's the fact that you got some money and everybody else around you can't even afford to eat. But, you got some money, it makes you rich. How do you define rich? Rich is maybe we're coming down to a society that's got such a level of poverty that if you've got a bed to sleep in that doesn't have rain dripping on your head, you're rich. If you've still got internet, you're rich. We might be coming down to that. Whereas if you're still able to eat, you're rich. Where all these other people, we might be coming down to that. Who do we got to thank for all of this mess? Central banks. Thank you guys for listening, and we'll catch you guys in the next show. Bye-bye.